Welcome to our channel. If you want to invest in S&P 500 index funds, follow these step-by-step instructions to own a piece of America's 500 largest companies through a single investment. Step 1. Understand what the S&P 500 index represents. It tracks 500 of the largest US companies across all major sectors, providing broad exposure to the American economy's strongest businesses. Step 2. Compare S&P 500 index fund options from major providers. While all track the same index, they differ in expense ratios, minimum investments, and whether they're structured as mutual funds or ETFs. Step 3. Choose between a mutual fund or ETF version based on your preferences. ETFs trade like stocks throughout the day, while mutual funds transact once daily at the closing price. Step 4. Open a brokerage or retirement account with a platform offering commission-free trading on your chosen S&P 500 fund. Many brokerages have eliminated trading fees, making it easier to invest regularly. Step 5. Determine how much to invest initially and set up automatic recurring investments. Regular contributions using dollar-cost averaging help smooth out market volatility over time. Step 6. Reinvest dividends automatically to take full advantage of compound growth. The S&P 500 index has historically delivered strong long-term returns with dividends reinvested. Step 7. Maintain a long-term perspective and avoid panic selling during market downturns. The S&P 500 has historically recovered from all downturns and reached new highs over sufficient time periods. Don't forget to like this video and subscribe to our channel.